Hello guys, right, this is going to be a quick video and I don't want to get carried away with doing too much in-depth analysis, but yesterday, I know I said it in the video, I haven't bothered to watch the video again, but I said if this breaks this low, low, high, high, low, high, high, with a close on the daily chart, which we're on now, then we will most likely get a pullback. I know I said it, and I should listen to myself more. And I should go back in time to when I used to write handwritten notes in a notebook as to what I had been doing. This is a strategy on its own. So if you only get a chance to look at daily charts or one trade a day or whatever, I suppose without looking at charts, thinking out loud, H4 could be done as well. I've mentioned this many times, and I think I might add this to my book box of tricks. I really must add it to it. That's not a think, I must. So low, high, high, low, high, high. Break of that low, expect a pullback. Now the best thing you could probably do is actually, that would be support. So you could probably say, okay, it's going to test that support as resistance. If it breaks that support, so let's put it on. I said I wasn't going to analyse this too much, so I'm not going to. I don't want this to be a long-winded video. You go and do your homework on the charts. Then if it breaks that support and it fails to hold as resistance, using the lower time frames, and obviously using the indicator and using this reversal method and reverse and break, as it were, the trend candlestick trends, you should be able to enter that trade safely. After I've walked my dog and had a bit of relaxation time, I will perhaps go into more detail with this. So conversely, so there was a from the break of that green line there to the high, there's a 50 pip move back. Where would it go to? Well, the most recent support broken tends to get tested as resistance. So they've smashed this with those 3 daily candles. Finally it's given way, crashed down, broken, done what I wanted it to do, which is break. So this now is even more bearish. But what do I always say? Price never goes in a straight line, or rarely, and if it does, you're just catching falling knives, and that's very risky. Always wait for a pullback, re-enter. So as I've mentioned many times, the most recent support broken by the candle that confirms down, as it were, tends to get tested as support. And you know, how much plainer can I make this, guys? You know, you haven't got any squiggly lines, you haven't got any pivots, you haven't got any Fibonacci's. You've got simple support broken gets tested as resistance. And this is the first support broken, if you like. And so what does that green line, the low of that green candle, become? It becomes I was going to swear then, an effing significant level that if it is closed above, doesn't hold as resistance, then the price is likely to go up. So we're just adding tick boxes to our trading method. Conversely, over here, if this had gone high, low, lower, high, lower, low, low, high, higher, low, higher, high, higher, low, higher, high, and close above that level there, I'm going to ask you a question. What do you think price might have done? Yes, you got it right. It might have reversed to the downside. It is in fact highly likely that if this was a close up here, I'll put this on to explain what I mean, then the opposite is true. It will come back and test that yellow line there, and if it breaks that yellow line, it's highly likely it's going to crash a lot more. In this case it was 50 pips, so a daily chart can have a 50 or 60 pip, a daily candle rather, can have a 50 or 60 pip retracement after the close. And that's it, guys. So this one here, low, high, high, low, high, 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 low, lower, high, lower, and it keeps going until it closes below there. Let's put it on. So once it's closed below that level, from this side, what do we expect it to do? Well, it's come back to test it. That, if that's a 50 pip move, that must be the best part of 70-80 pips. From the low to there. In fact, it's 170 pips. Don't know how I managed to make 50-60. 170 pip move. And then, just as I said to you, price doesn't have to go in a straight line. It's pulled back and back and back and back, tested it numerous times, and then started to collapse again. So, you know, this is 13-14 years of experience with candlestick analysis, which came about as a result of learning about 2B reversals and 1-2B reversal by Vic Sporandio. You could go on forever. So that is a simple way to preempt what may happen. We had all day to think about this, and like a tit in a trance, I got up this morning and forgot all about it. Could have made life very easy by just studying the pullback here and entering a long trade on dollar CAD instead of that GJ. So that's it. I'm going to upload this. This is an alternative way of using my method, catching the higher time frame reversals. Thanks for watching. Have a great day, and I'm off out with Doggy Dog.